Hi, I'm Alan Brochstein of 420 Investor. Perhaps you've heard of me before through either that service or through my writing at Forbes or Seeking Alpha, maybe an interview at Canna Insider. I've been in other media as well. In any event, I've been following the space for 7 years, a little bit longer than that, and I launched 420 Investor at the end of 2013 with the goal of helping investors navigate their way through the cannabis sector, which at the time was a wild west. While we have evolved a lot since those days, it's still a pretty treacherous sector, in my opinion, and this pandemic has made it even more challenging. I wanted to take a few minutes today to talk about my perspective on the market right now and share some insight in terms of what I expect to play out over the coming few months, quarters, and even years. What I'll do at the end is talk a little bit more about resources that I offer, whether free or through my service as well. But before I get going, I wanted to just backstep a little bit. And coming into this year, I was a little bit concerned. And that's because our sector was hit with a capital crunch that really was exacerbated with the vaping crisis, if you recall, that hit in September. And the real challenge for the cannabis industry is that it's expensive to build cultivation and processing and open all these dispensaries and hire people and everything. And the capital was flowing freely years ago, but it started to dry up, and it went totally dry really in the fall. And a few companies were able to access capital, but because of the maturity level of the industry at this point, a lot of companies are not cash flow positive, and they don't have access to capital. So we were already seeing some problems coming into the year. And my outlook at the beginning of the year was that it could take some time to work through these capital challenges, but there were some bright spots. And the bright spots included the abysmal rollout in Canada was supposed to get better this year, and I thought that it would. And I'll talk more about that in a minute. As well, in the United States, there's a movement towards legalization at the state level by the legislature instead of by the voters. And when the voters approve, as we've seen for many years now, it's good, but it takes a while. So there was a thesis at the beginning of the year that I shared that Illinois legalizing, the first state to do so through the legislative process, would encourage other states to consider that route, put some pressure on nearby states as well, like maybe Ohio or Wisconsin. Obviously, one of the most important markets for legalization this year was New York, and it was on track to move in that direction through the legislative process. But unfortunately, COVID has really impacted everything that I just said. And so that's the bad news. The good news is the stock prices have fallen a lot. That's not good news if you own them. I don't mean that. But I mean from a perspective look. And so what's going on right now is the capital crunch has been intensified, and the horizon has been pushed out for a lot of the things that I, along with some others, were expecting. So at this point, it's extremely critical to have a good understanding of the financials of these companies. And I break the space into several different subsectors. And I spent today a couple of hours, and I did this last week as well, going through each of these subsectors one by one. And I'm sure there's other ways that one could split the market up, but these are the subsectors that I see. The very large LPs in terms of market cap, for sure, and maybe revenue as well. And those would include, in alphabetical order by ticker, Aurora Cannabis, ACB, Aphria, APHA, Canopy Growth, CGC, or Weed in Canada, Kronos Group, CRON, and Tilray, TLRY. That's one. Two, you have a bunch of other Canadian LPs. So not the very largest ones. And I'm not going to name those right now, but I wanted you to be aware, and I'll come back to that in just a moment. Then you go into the United States, and you have four very large, what's called multi-state operators, and those would include alphabetically by ticker Cresco Labs, CRLBF, or CL in Canada, Curaleaf, CURLF, or Cura in Canada, GTI, Green Thumb Industries, which is GTII in Canada, but GTBIF is the symbol in the US. And then finally, TrueLeaf, TRUL in Canada, but TCNNF, you may be more familiar with in the United States. So those are the big four. And then there's a bunch of other ones beneath there. And then, so that's on the production side. And just as an observation, it seems like the space has a lot of representation from the producers, both in Canada and in the United States, and a lot fewer in the other sectors that I'll mention. So there's a subsector in Canada that I would add beyond the large and then the others, which would be the extraction LPs. And these are highly specialized companies that don't grow their cannabis, but they process it. And we all know how in the United States, roughly half the market is not flower or pre-rolls. And so Canada is going to be moving in that direction. So that's another subsector. Then in the United States, you have the CBD Sub Sector, and there are a few companies there. I'm sure people are familiar with Charlotte's Web, CV Sciences, and there's a few others too. Then there's the ancillary companies, and I'm surprised, 7 years of following the space, that so few ancillary companies are publicly traded. But here we're talking about like Grogen and Kushco and Akerna, IIPR, I put in that category as well, innovative industrial properties. And then you have some other situations, I would say, like GW Pharma, which is kind of in a league of its own. It's a biotech. Theoretically, we could have more biotechs, but we really don't so far. I think I just nailed all the subsectors. And so I just wanted to talk about within these subsectors, and then also talking about the subsectors at large. I have been advising anybody that'll listen to me that in Canada, probably the largest LPs are not where you want to be. And the reason for this is they're overly complex and they're losing a lot of money, a lot. These companies all had capital thrown at them early on, and they had global empire aspirations that are not panning out. So I'm not saying that they're going down. That's not my prediction, but it's just not where my focus is right now. Now, an exception there might be Kronos Group, and I'll let you do the research on that. I don't have any positions in Kronos Group. I'm very interested in it because they have the backing of Altria and a lot of cash. But on the flip side, they have not proven their business at all. There's a couple of interesting things going on, as I tell my subscribers at 420 Investors. So I watch that one closely. It's a little bit different from the other big LPs. Now, when you get to the smaller LPs, and I'm not going to name them by name today, there are some great buys right now, I think. One that I've been talking about is a company that's trading at a tiny fraction of its tangible book value. And that's not unique. We're finding a lot of companies that trade at potentially less than their asset value. But here's the deal. These guys have no debt whatsoever. So that's kind of different. So people are really excited about Kronos Group, which I just mentioned, with its large cash balance. And it trades at a premium to their assets or to that cash balance. But I've identified a smaller LP that doesn't. There are also some other LPs that I'd say, similar to the largest LPs, they do have some balance sheet issues. Like if you look at Afria, a large LP, it looks like they have a lot of cash, but they have a lot of debt as well. Similarly, Canopy Growth, they have more cash than debt, but they're burning a lot. So when I look at some of these smaller LPs, what I'm looking for are signs that they've been able to scale, that their debt is manageable, and that their cash burn is substantially lower per unit of revenue than the largest ones. So the advantage to some of these smaller LPs, not all of them, is that they don't have these global aspirations. They have relatively simple businesses, and I think that's going to serve them well. Now, when we flip back to the United States, I have a very different view. I like the largest LPs. So the LPs, MSOs, the MSOs in the United States have never been able to raise a lot of capital. There was a short period of time right before they went public when they were able to raise capital, equity capital more easily, but it's never been easy. And so everybody should appreciate that the United States, nobody overbuilt it like Canada. Each state is separate, so there's sub-markets. These companies have had to keep their operational costs down because they don't have the luxury of what seemed like unlimited capital. So that's already a good starting point. And I would suggest to you that these four largest MSOs have much better cash burns than the largest LPs. So I think that the outlook in the United States is very strong for state by state growth. Some of the growth may come down a little bit due to these capital constraints, as well as if the pandemic continues to hamper operations to some degree, it may slow expansion, but the trajectory is higher for sure. And then among the smaller MSOs or single state operators, I do find some companies that look very attractive, but I think this is a treacherous part of the market. For example, there was a company in California, Indus Holdings. I wrote about this at New Cannabis Ventures recently, that had, off the top of my head, $50 million of asset value, but was trading at $7 million, but they were losing money. And they brought in an outside investor who I believe for about $14 million took control of the company, way underneath the asset value. So basically the company, the management team, the board of directors was willing to sell out at a very low price. And I fear that that's going to happen to some of these other smaller companies that aren't adequately capitalized, as was the case for Indus Holdings. So if you're going to be in that space, I think that you have to be aware that these larger MSOs have better access to capital. So you better be focusing on companies that either have positive operating cash flow or no debt, things like that. Otherwise, it gets challenging. The CBD space has been a mess. It continues to be so and will probably remain one until the FDA clears a regulatory path that permits the large retailers like CVS and Walgreens and grocery stores and Walmart to carry non-topical products. It's been a great development to see the topicals in these points of distribution, but the market right now, hyper competitive. In the natural channel, there are so many brands that the established ones are having a hard time competing. There's a lot of hyper competition that's driving the prices down. It's not sustainable, but it's hurting the established better companies in the short term. And so they're kind of waiting for the shakeout, either that those companies go out of business or more importantly, the FDA gives some regulatory clarity. So that's a tough space. The only good news is the prices have come down a lot. So I've been very cautious on that sector. I was in New Mexico this summer, and in Santa Fe, I went into the plaza and they had CBD oxygen for sale. Well, there's no such thing. CBD is super overhyped. The consumers are not well informed. It's a disaster, but hopefully it's going to get better. And then, I skipped a space earlier, so just to backtrack on Canada, it's easy to see why I skipped it. Nobody talks about it, but there is a small group of Canadian retailers. And in the United States, there are certain operators that focus on retail and certain ones that try to do everything. In Canada, you started off having to do everything. It was you produced it and you sent it out by mail to your medical patients. And now it's very different. I mentioned earlier that you have the processors, but you also have retailers. And I really like the retailers in general. And I think that this is an area where investors should focus. Now, it's a little bit challenging right now. The story this year was that the largest province in Canada, Ontario, which has been woefully undersupplied, very few stores there, was finally going to start adding stores and allowing public companies to own them. In the past, they had a lottery system and it was a bunch of mom and pops. Some of those mom and pops worked out deals with some of these larger public companies, so that, but the economics aren't full yet. But going forward, it's very likely that you'll see a huge growth. Right now, these retailers are mainly in Alberta, and so this was welcome news. Unfortunately, the COVID crisis is probably going to delay that timeline. So there are a couple names that I follow closely on my focus list of 29 names, and one of them I really like a lot. The other one I'm a little bit cautious on for a reason that I've explained to my subscribers. So then the last space, besides kind of the other bucket, which would be GW Pharma, would be the ancillary companies. And I think that, for a lot of investors, this is a great area because they're doing business with the multi-state operators. So it's a way that you don't have to bet on any particular jockey. You're going to win whichever horse wins. So That's one of the reasons why I like that subsector. Now, there are some capital constraint problems and there's some industry issues. The vaping crisis has certainly hurt some of the companies in that space. But I think, it's kind of an error that many investors make, thinking that if they're going to invest in cannabis, it has to be in somebody that grows it. I just don't agree with that. There are a lot of ways to participate in the industry, and that would be one. So I think Canada, just to wrap it all up, I've talked about the subsectors, but in the big picture, Canada is likely to improve, but it's being delayed. The big problem in Canada has been the limited product selection. It's been limited mainly to pre-rolls and flower, and not to the kinds of products that are so popular in their illicit market, as well as in the United States illicit and legal markets. And that's changing, but it's going to be slow, and COVID's going to make it even slower. And then the other point has been a lack of retail, especially in Ontario, but also in British Columbia as well. And so that's going to improve. Unfortunately, COVID's going to slow that down a little bit as well. So in the United States, I think the outlook's a lot better. So first of all, every market's a little bit different, obviously, and some markets have been very friendly during this time of crisis. Massachusetts, not so much. They closed retail, they kept medical open, but every other state, pretty friendly in terms of calling cannabis essential. And I think when this is all said and done, and whether it's 3 months, 6 months, or a year, I think people will look out and they'll say that the cannabis industry kind of really rose to the occasion. That's what it appears to me, that they are serving their customers to the best they can through some limitations and through some very trying times. And I think legislatures are going to be much more open to legalizing or expanding cannabis. They might have medical and add adult use. And especially, if this plays out as I expect, which is that this pandemic is going to leave our economy, which was just booming until this hit, in a little bit of a pinch, well, looking for tax revenue in employers is going to be very important, and I think that bodes well. But let me tell you something else, whether you agree with that or not. In the United States, these big four, while they are not bulletproof by any means, so I don't want to make it sound like they are, they're growing, their revenue exceeds those of the companies in Canada, and their operating losses, in some cases, or profits, are much smaller losses, very much more manageable. So unfortunately, these companies have a little bit of a capital markets issue. The very largest companies have been turning to sale leaseback and debt and have a huge advantage over some of the smaller ones. And this is very Darwinian, but I expect a lot of cannabis companies, both private and even some of these public ones, are going to go under, and consequently, the pie is going to get bigger, and it's going to be enjoyed by fewer companies, which will include, I believe, these 4 large MSOs. So that's my take. So at this point, let me turn the picture off of me and walk you through some resources, if I can do that. And so I have up here 420 Investor, but I actually want to start with New Cannabis Ventures. And I didn't even mention that. I introduced myself as the as 420 Investors founder and operator, but you may know me actually through New Cannabis Ventures. And here's the good news for you. This thing is free. And I just want to take a quick minute to walk through just some of the things that, if you're looking at the cannabis space right now, whether you're a current investor just trying to make sense of it, or whether you're a new potential investor looking for opportunities and just trying to get your bearings, we offer so many free resources here. And I want to start with, we do have some exclusive news, and I want to start with that. And so we do interviews. We've done 150 or so over the last 2 years, almost precisely. And, we did 2 this week, one with Indiva, one with TerraSend. I also publish content on our indices, which I'll get to in a moment, and I provide monthly updates there. We also maintain something called the Public Cannabis Company Revenue and Income Tracker, which I'm going to show you in just a sec. And I provide either 1 or 2 updates a month, depending on how busy the reporting season is. We have a weekly newsletter, which again, I'll get to in just a moment. Actually, I think I'm going to click there. And sometimes I have exclusive content. Like I saw an SEC filing about a company where the two of the three directors, he's not independent. He's the CEO. These other two were independent. They just walked out. They made no announcement till the next day. I saw it and kind of told the world. And you can see every now and then I'll find something that's breaking, like when Massachusetts did order their adult use to close. But I wanted to click on our newsletter first. So each week, we've been doing this, as you can see, since 2015. So for 4.5 years, every week, I'm charged with the task of sharing some insight as we start a letter. You can subscribe. If you just go to New Cannabis Ventures, you'll find the link there. It's also accessible under More up here, newsletter. And if you get the newsletter, what you get is this unique insight each week. You also get a list of what we think is the most important news that came out. So if you're a busy person, you're not tracking the market minute by minute, this is pretty valuable. It's like, okay, this is what I need to know. Oh, I already knew about that. I already knew about that. But oh, what about that? So that's really it. And then we have links to some of our other things. It's a pretty simple newsletter. It goes out on Sunday mornings, every Sunday morning. So let me walk you through some of our other unique resources. Our philosophy, we've built a platform at New Cannabis Ventures that's built on trust and on serving our readers. And in case you're wondering, we do have advertising sponsors. They're all listed right here under featured. You can see these are our clients. So this is not anything that we hide. You can go to our disclaimer and find out the range of payments from these companies. But I will tell you, we are as objective as can be, and we act, even though obviously we have to disclose that we have these clients that advertise and make all this possible. We act as a very objective organization. We don't tell you on this site what stocks to buy, or this is a good company. We don't do that. We publish news, and if you go to the homepage, you can see a lot of what we do is simply press releases, and we cull through. And this is why our readers like us. Not only are we a trusted platform, but we're a great filter. And through our filtration, we're able to save our readers a lot of time by just sharing the news that's important. No fluff, just the important stuff. So the other thing that we do besides filtration is we have a lot of resources. And I'm not going to go through all of them right now, but I wanted to show you a couple of them. First of all, I mentioned these indices. We have 6 different indices. One we call the Global Cannabis Stock Index, and it goes back all the way to the beginning of 2013. And so, like I said, we update this once a month in terms of sharing like what's moving within it or what's not. But you can see all the names that are listed there. There's information. You can check and see how the market's doing. Most recently, we created the American Cannabis Operators Index, and this has MSOs and CBD companies in it. We also have a Canadian index as well as 3 tiers. The tiers are very interesting. This is unparalleled in the rest of the market. Yes, there are some other LP indices, but ours we break up into the very largest ones by revenue, and those are there. And then we have a middle tier, and then we have a small tier, which, by the way, is getting smaller. Why? Well, partially because some of these companies are graduating up, but mainly because they're graduating out. We put some rules in place that limit inclusion. If you don't have $1 million of revenue in a quarter and your price is below 20 cents, you're out of here. So anything that's below 20 cents here had $1 million in revenue. If they backtrack, they're going to be out. So that's one of our popular resources. This is maybe our most popular resource, and that's our Public Cannabis Company Revenue and Income Tracker. And here we break it up into US dollar reporting, which and then we have Canadian dollar reporting. And you have to have $7.5 million of US, so basically 10.5 right now of Canadian to qualify. And we added this operating income column as well. So you can click on here or come to this page and you can see who has the most revenue and are they making money or losing money. And, with a caveat, operating income isn't a cash number. So if a company's issuing stock compensation, It's included in that, although it's not cash, but that would be dilution, so it's good to know. So for instance, you can see here, take a company like Harvest Health, had 33 million in revenue last quarter, but for every dollar of revenue, they actually lost a dollar of operating profit. Compare that with TrueLeave, 70 million, but positive 23 million of operating income. So very useful tool that our readers really like. So this is a great place. Oh, one more feature I wanted to share. We have an app. People love the app. And if you are a trader, you want our app because you're going to get the news delivered to your phone real time. And people love that. So that's what this is all about. And we have other resources. You can go around and check it out. And I just wanted to use just a few minutes to talk about 420 Investor. And look, New Cannabis Ventures may be everything that you need, but I'll tell you what it isn't. It isn't insight and analysis. The only place where there's insight and analysis on New Cannabis Ventures is in my Sunday newsletter. And we get complaints because I definitely don't give it all. Where do I give it all? Right here, 420 Investor. I've been running this since September of 2013. Lots of subscribers, lots of people that have been with me the whole time through the thick and the thin, and there's a lot of thick and thin in this market. There's a lot of thin, actually. And so let me just walk you through some of the features. And I thought what I would do first is just, if you're a subscriber to 420 Investor, this is what's called the activity feed, and this is the kind of content that you'll get. So today, I did a video that was 1 hour and 37 minutes. It's my weekend video, and I go through 29 names on the focus list, plus a few others, and one by one, talking about not only technicals, but also about my views on valuation and fundamentals as well. And so that's the first thing in the activity feed that you'd see right now if you were a subscriber. Second thing, and because of all the volatility in the market, I've added this. This is not a permanent feature. It's a temporary new feature, or may become a permanent feature. But I have, I'll just show you what I'm doing here. I have started a review where I go through, like I said, these sectors, the large MSOs, and I have some commentary on them, and you can see the price action over some different time frames, and then the other MSOs, the large LPs, the other LPs, the extraction LPs, the Canadian retailers, which I forgot, but then I remembered, the ancillary companies, the CBD companies, and then I treat GW Pharma in a league of its own. So that's something you would get, these blogs. It's just content that I create and share with my subscribers only. Every Friday night, I create a summary piece, and I email out a link to it, and it's a weekly review. I have links to any sort of content that I created in the week, which I'll get to that in just a minute. One of the things I've been doing recently, well, I'll get to that in a minute too. So this is all the news for the week. So I basically cull through all the news and just put it all here. So if you just want a quick reminder, or maybe you didn't pay attention during the week, then you're able to find out what that was all about. I talk about the indexes, the Global Cannabis Index, I should say. I talk about my model portfolios, which I'll explain in a moment. I discuss the calendar, companies that will be reporting next week, whether they're on my focus list or not. And then I have this outlook at the bottom. So that's each and every Friday night. And then that's that weekly review. And then when news comes out, I share it. So here was the news on Ontario. That the retailers are no longer considered essential service and they're shutting it. So that was news I provided. Here's another thing I've been doing, and my subscribers love this. For each company that's reporting in the given week, like Harvest, Ianthus, Kushco, and TrueLeave this week, I go back and I review what happened last quarter. I talk about what's expected this quarter, and then I share my thoughts as well. And sometimes I'll have a prediction as well. Not always. These things are hard to predict, right? So then let me go next to down the activity feed. So I added to GW Pharma. And so when I do a trade, and I'll get to the model portfolios in a minute, but these trade alerts show up, and I'll get to that. But when I do a trade, I try to explain why I'm doing it or kind of what I'm thinking. There's more news. Okay, so on the videos, during the rest of the week, I talked about the weekend video that runs an hour and a half or 2 hours, and my subscribers love it. And the good news is you can play it back at 2 times speed if you don't have enough time. These days, people have more than enough time. But I also do 9 other videos during the week, Monday through Thursday after the market closes, and Monday through Friday, an hour after the open. So that's another thing that you can count on. And if you like those kind of that type of update, video and audio as opposed to writing, then that's for you. I share news in the morning. I think that's enough of the activity feed, but everything shows up there. So let me just quickly walk through some of these other features. So one of my favorite things is the forum. In the forum, I'm not going to go through it so much right now, but here's my focus list. So I have 29 names on my focus list, and these are them. And I'll just give you an example. So on Organogram, there's one main discussion, and it has 27,000 views, 1,700 different comments in it. And this goes back to July of 2014. And so, I get some research. It might be published here, or I might have people ask me questions here. And that's really one of the most important things. Any insight will help, so I try to give some insight. So this is a place where, for the focus list, I post news and I interact a lot with my members, but also for not the focus list, there's hundreds of other names that I follow not as closely, some of them a lot more closely than you would think, but there's other categories too. But this is one of the most valued assets of 420 Investor. If there's a stock you're interested in, I'm going to give you a real example. I don't follow Cerna anymore, but when I mentioned earlier, that was the company where the 2 of the 3 directors walked out. And I just want to show you this real quick. So it's really easy to navigate, or I think once you get used to it, it's pretty easy to navigate. And so here's little old Cerna. And the last post I think I had to Cerna was on March 27th when that happened. I put this post in. So somebody called me. This was actually like an industry person who happens to be a subscriber. I am not able to really speak to my subscribers. I'm subscribed to this. I don't think I have to be subscribed, but you can subscribe. So if you care about Cerna, you're going to get an email alert when there's something posted here. So it was kind of interesting that I had posted that. So anybody that cared about it could have seen real quickly and learned about this. Not that it necessarily mattered, but sometimes it might matter. Sometimes there might be news on a non-focus list name and you're subscribed to it and you're going to get that. If it's a focus list name, it's going to go in this activity feed. So I mentioned the blog posts, and so one of the things that I have here is this weekly review I mentioned. Plus, I mentioned as well that more recently I've been doing these subsector reviews. And then on top of that, the weekly review. Oh, I just said that. Sorry. These earnings previews. So then I have these other things, how COVID-19 will impact the American cannabis industry. And it says here, the third of 3 feature articles for the April edition of the 420 Investor newsletter. I have a newsletter that costs a lot less, but it also offers a lot less. And that newsletter includes 3 feature articles. This was one of them. I release them real time. As soon as they're done, I release them to the full subscribers, but then the newsletter subscribers do get them at the end of the month. So that's another type of blog. Then the videos I mentioned. We have a chat on Tuesday nights, and that usually runs about an hour, and it allows subscribers to put questions in writing and hear me discuss it in my voice. Let me go to the newsletter real quick. So this was the newsletter that came out, just so you have an idea. If you wanted to subscribe to just the newsletter, I think it's a great deal. I think it's $199 a year. And this is what it includes: a market review and outlook, 3 feature articles, a summary of, I showed you those weekly summaries. Well, this is a monthly summary of important news for the focus list. And then the returns, so you can see like kind of over the month which stocks did better or worse. It's included in this, and it's also sold separately as well. And then finally, I have these trading portfolios, and the most recent one is 420 Quality, and this is more longer term focused. And I started this with $50,000 March 17th, 2017. So in 2 years, it's up from 50,000 to 62,000. That sounds great, and I am very proud of it. But it's so far down. It's down 44% this year with the market. It's doing a little bit better than the market. So this is not a no turnover, or I wouldn't even call it a low turnover, but it's lower turnover, longer term focus model portfolio. I have another one that I take more risk in. This one is more limited to what names I can own. It's not intended to be for market timing or anything like that. It answers the question, if I'm going to be invested in cannabis stocks, what are the ones that I should be in? And I probably showed that too long, but that's my portfolio right now. Oh well, you got to see it. So when I do trades real time for this, and there we go, activity feed. And when I do a trade real time, it shows up in the activity feed, and everybody sees it at the same time. There's another trade I just did, I added to something. So anyway, I appreciate you taking the time. If you go to 420investor.com, it'll take you to the MarketFi page. This is what you would see. And as you see, it's $600 a year, $50 a month. Here's the good news. Well, I have a lot of people that pay that and are happy to pay it because it helps them actually make money or avoid losing money. But here's the really good news. Well, I don't recommend doing this if you're not interested. But if you're at all interested, we have a 30-day no questions back guarantee. And so if you join and you say, you know what, I listened to Alan, it sounded great, but it's not any good, then you can get your money back immediately. So anyway, I appreciate you taking the time to listen to me today. And if 420 Investor is for you, I hope to see you in there. And there's a way to contact me if you have questions about the service. And then given that it's free, I certainly expect if you're interested in the cannabis space that you will take a look at New Cannabis Ventures and rely on it as so many others do. So with this, let me just wish you the best during these trying times. And if you do have some interest in the cannabis space, I hope our paths cross. Take care.